Say what's up, ladies. Hi, wave everyone. Today we actually have a special guest here. His name is Jerome Myers. So, for everyone that has been living under a rock, Jerome Myers is actually a real estate investor, joint ventures and syndications located in this is a pop quiz.
Greensboro, North Carolina.
Yeah, I wanted to make sure I had it right. Thank you, sir, for chiming in. All right, so you've actually been in this for years, so thank you for joining us. How are you today?
Amazing. Honored to be here with you, ladies.
That is good. We appreciate you for coming in and joining us today. So we really just want to kick it off real quick and ask you a couple questions because as you can see, all the people in this group, they're women.
Mhm.
And then what we did, we actually started our own investment group and we are calling on you to just give us a couple pointers, let us know how you went through the process when you started developing your company and let us know what we could do moving forward in order to, build a powerhouse here and not necessarily copy what you're doing, but get motivation and inspiration from that. And you cool with
You
that?
can copy, it's okay. It's not copyrighted. So, I mean, please
All right.
use
So,
everything that I've used for sure. Don't
all right.
go down the hard road.
Understood, understood. So first and foremost, what we do want to mention is we watched a couple of your YouTube videos, and a lot of them explained your transition from employee to investor and what the process was to get you to that point, as far as working for a job that had you lay off people and you weren't feeling it at all, and you said once they had you do it again, that was just going to be a wrap for you, and you did exactly what you said you were going to do. So the question with that is, when you decided to leave, what made you say I'm going to do start doing wholesaling?
Yeah, so I didn't actually start out wholesaling, or at least that wasn't my intention. Thought I was going to go buy an apartment building. And what happened was I went to the first bank and they said, well, what qualifies you to do this? And I said, well, I got an engineering degree. I got engineering license. I'm certified in project management. Started running down these credentials and they said, yeah, what else you got? And I said, well, what do you want? Because I'm just guessing right now. They said, well, we want to know that you bought a building of similar size and executed a similar business plan in the past successfully. And I reached in my pocket and I offered him a piece of lint because I didn't have that. That was my first deal, right? And so it's the cliche, how do you get experience without experience? And I didn't have an answer for that. And he said, well, go get a partner that's done this before. And I looked at my phone and I was like, I don't know anybody that owns an apartment building. So how am I going to do that? So I was like, well, they're just being jerks. I'm going to go to another bank. So I did that again. And they told me the same thing. And then I went to another bank. And then this one said, well, in order for you to get the loan, you have to have net worth that's equal to the net worth that's equal to the loan amount, and liquidity after you close is 10% of whatever the loan amount is. And so if I'm doing $1 million deal or $1 million loan, then I'll have to have $100,000 in cash after I put the down payment in. I was like, okay, this is just getting harder. So I reached in the other pocket and I gave them the other piece of land I had, and they said, no, we're not going to give you a loan. And so when I got to the 10th bank, I finally realized that I was the one that didn't know what was going on. And so from there, I pivoted and said, well, I can fix and flip because I was doing hard money lending while I was working. And so I bought my first deal and then I bought another deal, bought another deal. And it was sitting on the stoop of this house that was built in 1920. And a guy pulled up in a white Dodge Ram. And he hopped out. He said, hey, bud, we're getting ready to do a house down the street. I want to see what your finishes look like so that when we come to market, we come with something comparable. And so he walks in the house. He's like, oh, you took the walls out and you've got the granite. and you got the gooseneck sink in the island, and that door right there is period correct because it was old, right? And so it wasn't 36 inches, it was something smaller than that, a French door that was going out to the deck. We go upstairs, we look in the bathrooms, like, man, we really like how you added this one in. The tile's super nice. He's like, okay, well, thanks for letting me check this out. And he gets ready to walk across the threshold and he stops. He looks at me, he says, hey, do anything about that building behind the Chimbo Mart? I said, the Chimbo Mart? He said, yeah, the Chimbo Mart. I said, the 23 unit apartment building? He said, yeah, that one. I said, well, I tried to buy it 4 or 5 months ago, but the banks wouldn't give me any money. He said I didn't have the experience I needed in order to be successful at doing the deal, and I needed a partner. He said, oh, well, I'm going to make an offer in that building later today. I said, you're the guy I've been looking for. Don't leave me out of the deal. He said, well, what are you going to bring to the table? I said, I don't know, but don't leave me out because the bank said I need a partner, and there's no way that you're going to go make an offer on this if you don't have experience. So don't leave me out of the deal. He said, yeah, I hear you, but what are you going to bring to the table? I said, look, man, you're the guy that's going to help me get in. Don't leave me out of the deal. And he turned red, got frustrated, shook his head, and walked away. And I was like, okay, we're going to get this thing done. And that was on a Wednesday. I was like, okay, I'll get the call Thursday afternoon. We were under contract. Thursday came and went, nothing. Friday came and went, nothing. I was like, okay, maybe they just need to go negotiate through the weekend. Monday, nothing. Tuesday, nothing. I'm like, okay, well, it's been a week. I need to call this guy. And then I realized I didn't have his phone number and I didn't know his name. And so that's when the feelings sat in that like I blew my golden opportunity. I finally met somebody who had experience. I couldn't articulate my value to them. I didn't get their contact information. And I was just relying on them to bring me on as a favor at that point because I couldn't tell them what I could do for them. I didn't talk about money. I didn't talk about my experience in construction and engineering. I didn't talk about any of that. And so we get to the next weekend and I really begin to understand that this is over. And then on the following Tuesday, I get a phone call from a guy I used to lend money to. And he said, hey, man, I got the opportunity to be a general contractor on this project. Um, I told them I would only be comfortable doing it if you were involved in the deal. This is a property that we talked about back in January, February. I was like, oh my God, what do I need to do? He said, we're having a meeting tomorrow at 9. I said, give me the address. I'll be there. And so it was the three of us. And then we added in a property manager. He brought some equity to the deal. And then the broker rolled their commission in. And the five of us took down this deal for like 1.27 million. And in April, we sold that deal for, I don't know, like 3.6, 3.7, something like that. It was a full renovation, like a total gut. We did the roofs, parking lots, landscaping, siding, took walls out on the first floor, added half bathrooms and laundry rooms on the first floor, all new appliances, et cetera, et cetera, et cetera. And so that was how I got into this space. And then I realized, well, wholesaling is a really crowded market. What if I wholesale small multifamilies? And so I started doing a little bit of that. And then I was like, this isn't my business though. Like the 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 chase of finding something to sell is only interesting if you're hunting to get something that you want to hold. And so I realized fairly quickly like that wasn't what I wanted to do. And I think once you transition from somebody who doesn't have any experience, and for a lot of people, a lot of banks, they consider experience signing a loan, guaranteeing a loan. Um, some people will say, oh, you get experience by raising $100,000 to put in this deal, but it doesn't show anywhere that you own that. And I think, especially women, they get taken advantage of when they get put in that place. So I realized that the wholesaling wasn't what I wanted to do, because it was, the transactions were exhausting for me. I'm an operator. I want to buy, I want to hold, I want to improve the value. And I just didn't see that as part of the wholesaling model. But I have wholesaled, I have fixed and flipped, I have bought, hold, improved apartments. And
Yeah, so you
We've
have
been
a lot
playing in
of
development.
yeah, so you have a lot of experience and background in it from basically where it took you from where you are to where you're at now. And if I recall correctly, when you did take that first deal, you were brought on as the asset manager, right?
Yeah, so I've been the asset manager for all the projects that we've done so far. But yes, I was fortunate enough to get in that seat in the first deal, which is highly uncommon.
Which congratulations. And then at the same time, when you did do that, what experience did doing being an asset manager on that project help you along the way when it came to your other transactions and deals?
Yeah, I mean, if you think about it's all women, but I suspect some of you have watched football at some point. I played it for a really long time. So,
There's,
um,
and then some of us have sons. You could really
yeah,
understand.
sons, partners, like all
Y-
of that, right?
yes.
So the the asset manager is very similar to the quarterback, right? And I assume you guys went to high school. So there was a quarterback and that person touched the ball the majority of the time when the games were happening, right? The asset manager is quarterback, right?
Hmm.
They're on the field directing the stuff that happens. And so you put together this nice, pretty business plan before you close on the deal. And then you actually got to execute the play, right? And so the asset manager is responsible for getting construction, property management, and everything else together to make sure that the deal goes as planned. Now, even if you have a general contractor, somebody has to manage that general contractor. And for that first deal that we did, one of the partners was a general contractor. So that can get messy because you're not going to kick a partner out of the deal and they might not perform as well, but they're financially incentivized to do really well, but that doesn't mean that it's going to happen. And so somebody has to be there to hold them accountable and then make recommendations if things are not moving along to either replace or to renegotiate the contract. And so that was a big part of what I had to do. And, my last job in corporate America, I built a $20 million division of a construction company. And so I was employee number 2 on January 13th. By September 30th, we had 175 people on my team. And then by the end of the year, $20 million in revenue, 30% profits. And so I was using those skills to figure out how to make this work because we had so many different tasks happening. And so that I thought was pretty valuable. There's another piece of this where for a lot of people, they believe that asset management is simply bookkeeping and accounting. And so your property manager will do a significant piece of it, but then there's a lot of things that get paid outside of property management, like taxes. Well, it's not a lot of things. Taxes and insurance are usually the two big things that property managers don't pay.
Mm. And that's where your job came into place. Is you basically had to you came in working under a guy that didn't want you on the deal in the first place because you didn't have the money, and then you came in and basically took charge of the deal. So, oh, go ahead.
No, so what I would say is he didn't not want me in the deal. I fumbled the ball. He asked me what I was going to bring to the deal.
Mm-hmm.
And I said, don't worry about it. Just bring me in. Right. And I think that was part of me being humble in the wrong spot. Right. Like he had no idea what my credentials and certifications was. I had money. Right. Like
Mm-hmm.
money wasn't the issue for me. I tried to go buy the deal by myself. So that wasn't the problem. But the problem was I didn't articulate my value to the person who had experience, who was going to be the one that was credible with the bank. And
Mm-hmm.
so it's not that he didn't want me in the deal, but he had no reason to have me in the deal because I didn't tell him how I could help to make the deal go better.
Okay. So what you would have done different if you were to redo that is you would have basically read your resume of all the reasons why you were qualified.
That's part of it, but I think you do it in a different sequence, right? So facts and numbers are boring, they're not compelling, but telling stories are, right? And so understanding, well, hey, what what's missing on the team right now, right? Like what do you need? What aren't you strong at? You're not good at underwriting? Okay, well, I know how to underwrite. I've got my template, I can build the model. I've got, part of my MBA was financial modeling. Like I can do that. Is it somebody to be boots on the ground during construction because we've got a huge project there. I can do that. Do you need somebody to help estimate the construction budget or review what the GC puts together? Do you need help with scheduling? Like, what is it that is lacking that I can make go away for you? Because when somebody's got experience, they usually have access to capital. And so the way that you get into stuff is by having the deal. If he has the deal or she has the deal too, then you've got to figure out what don't they want to do? What's a headache for them so that you can take that off their plate and be a valuable partner in the deal. There's no reason for somebody to include you in the deal if you don't make it better for them in some way, shape, or form. At that point, it's just charity. And I don't know many people who are running businesses who do charity, right? Oh, I like you, I'm gonna bring you my deal. That's not a thing.
Right, right. So, with this being a group and, we're functioning as a team and a partnership in all ways and trying to get transactions done, where do you feel partnerships and groups fall short when trying to, go after deals and transactions around property?
If everybody has the same knowledge amount of knowledge, I think that's the first step, right? So you don't know what you don't know.
Hmm.
And Brittany went through our multifamily investing course, and what I can tell you is she knows all the parts pieces that are necessary in order to pull off a deal, right? If you haven't formally gone through some organized education, these wild animals will bite you, right? You'll buy something that you think is a slam dunk, and you'll find out really quickly that you're writing checks. And depending on how much capital you have, you may not be able to write enough checks in order to get to the place where the property starts paying you. I think about it like alligators and geese, right? If you feed a goose, it'll lay eggs. If you
Hmm.
feed an alligator, it's going to give you, right? And so the point is, you got to be able to identify the difference between an alligator and a goose. And just because you think you found a goose, that doesn't mean that the goose is going to lay the egg for you, right? They still poop too.
Hmm.
And so you want to have an opportunity for it to lay an egg for you. And so when I watch people buy deals now, they pay too much, cost basis is too high, interest rates continue to rise, which means that unless their rents go way up, people aren't going to be able to get debt at a reasonable rate in order for the cash on cash return that they need to happen, because their debt proceeds are going to go down.
Hmm.
And so if you've got a 60% leverage loan, your cash on cash return is going to be like 1 or 2%. And so
Okay.
now you can't get out of the deal because your cost basis is too high. And it's just, but if you don't understand the math, like you're already lost for, and then that's just with the math. Then there's like actually operating the deal, which is the mythical being, right? Like for most people, they operate deals and they don't go well at all. At all. Like you got all of this money that you think you're going to make, and then you end up making 70% of it, but your model said you're going to make 95% of it because occupancy in that sub market is 5%. And you're like, uh, I'm not making any money. And then if your
Hmm.
debt's high enough, you're writing checks to pay the mortgage.
Right.
Um,
Okay. So it's important for everybody in the partnership or in the group to leverage each other's strengths and work towards the same goal in order to get to the end, as far as get to the point where you could sell the property and everybody leaves happy.
it's probably more important that there's grace and understanding in the deal, especially the first one. I like to buy deals from failed partnerships because they just want out, right? And they'll sell it at a discount.
Which makes sense. That
And so
definitely
you
makes
harvest
sense.
that equity. And so there's grace and understanding. And this is why if you haven't, has anybody done a deal, a multifamily deal in the group
Yes, there are people in the group that have.
as a lead
Has
and
anybody
not
done it?
syndication? Okay.
It looks like I'm
Because
seeing head shaking
yeah,
now.
I'm looking when I say done a deal, I mean active operators. Just one thing to push your capital in as an LP and be passive and get the reports once a month. But it's another thing in being active in the problem solving and operating operations of the deal. And so I tell people not to syndicate if they haven't done the deal with people that they know in the joint venture, because there's going to be stuff that goes wrong. I don't care how good you are. There's going to be stuff that goes wrong. And if there isn't grace and understanding amongst the group, you
Mm-hmm.
can you can ruin your multifamily syndication career before you even get started.
Mm-hmm.
And so having the a small group of people who understand, are fighting the fight, and are willing to do whatever it takes to get through to your point, I think is the most important piece. From there, I think you want to get into, well, who knows how to do what? And you want somebody who knows how to do some of everything, right? Somebody who's knows what it takes to go end to end, knows
Mm-hmm.
where they need to be at an NOI point in order to get the exit number that they want. Like somebody needs to be really good at math, somebody needs to be really good at people.
Mm-hmm.
And the people is all of the different vendors, the property manager, the yard person, all this other stuff, because it is not buying the deal, handing the keys to the property manager, and then waiting for the money to roll in.
It's more involved in that. Now, as you can see here, we're a pretty big group. Like there's 20 people in this room, but the group that we have is upward towards 100. So, have you worked in syndications or groups before with this number of people? And if you have, how did that turn out?
So I don't personally syndicate because I don't want to have to return value to shareholders, right? So the whole reason I left corporate America is because I didn't want somebody who just was looking for money to be involved in my business,
Mm-hmm.
right? There is a social aspect to my thing. So in COVID, there were people who couldn't pay their rent, and we had the opportunity to evict some of them, and we didn't. And in the end, we got rewarded with the COVID relief funds that the different government agencies had, but that negatively impacted our cash flow. Now, there are a
Mm-hmm.
lot of operators who will tell you that they didn't have any delinquency during COVID and nothing was impacted. I'm not one of them. My cash flow was impacted. We made less money in 2020 and 2021 than we did in 2018 and 2019, without a shadow of a doubt. If I syndicated, I wouldn't have had that option. I would have had to evict people and then try to get the new person in as soon as possible.
Mm-hmm.
I that for me, that's not as interesting as being able to extend that grace to somebody who's had a hard time. And it's not just my decision, right? It's my partner's. Hey, what do you want to do about this? And then it's a net of $10,000 against the balance sheet or the P&L. Can we afford it? And then we make our decision in what we believe is the right thing instead of letting the money drive that decision, because we want to improve the community and make money, not just make money.
Okay, which all that is understood and I appreciate. So that was my Q&A in order to lead this, and you gave us a lot of great information. We're actually going to open up the mic for other people to ask you
Oh, cool.
questions and get involved. But before we do so, I got a couple of off-topic questions for you.
Okay.
What's favorite color?
Red.
Favorite food?
Ooh. Um. hmm,
Too many
Lasagna.
options. Lasagna. Lasagna. That's an interesting one. But we're gonna go with it. What's your favorite vacation spot?
Ooh. What else do I know I like the most? I guess if I had to pick, hmm, I don't. I did a trip to St. Lucia this year. That was really cool.
For
Um,
real.
yeah, so like I've got a group of people, and like we've got a mastermind, but we do an event in March called Extraction. And so we take a group of people out of the country and then we just network and mastermind for 3, 4, 5 days. And like,
Did you
so
say
when we were
out
in
of the
St.
country?
Out of the country. Yeah. So we went to St. Lucia in March. And so it was like 19 or 20 of us.
I had to
Like,
echo that because I'm sure Lacey, the leader of the group, just got all bright-eyed when you said
uh,
that. She's been talking about going on retreats for a long time.
yeah.
She would
So we're
love
doing
that.
Belize. We're doing Belize in March 2023, but we did St. Lucia last year. And so I will say that that St. Lucia trip has been my favorite trip with a group in a long time. We've been a lot of places, but just to have those people around and be able to experience that. Like we had a private yacht or catamaran. We did dune buggies and like we did a ton of really cool stuff. So yeah, I'll go with St. Lucia.
St. Lucia it is, everybody. So it sounds like we're just going to copy Jerome and go to St. Lucia. So that is my time on the mic, Jerome. I do thank you for speaking with me. I think Alicia or Lacey are going to take over. Are one of you guys going to take over so we could see who's raising their hand and get some questions in?
Yeah, no, that was brilliant. Thank you so much, Jerome, for your time and really taking the care in your responses. There's been a lot of value in this conversation and just connecting with you today. My burning question after that little Q&A was I was curious what problems you find yourself solving day in and day out.